terms of a brokerage report from Credit Suisse. So they've maintained an outperform rating, but they've sharply raised the target price on Hindalco to 555 now versus the earlier target of 330. In fact, Credit Suisse expects the free cash flow yield of the company of around 14% and 16% respectively in FY23 and FY24, and they believe that the highest stable, Novelis EBITDA going forward would mean that this company can command higher premium versus the historical averages. So for FY22 itself, they've raised the EPS by 82%, and for FY23, CS has raised the EPS estimate by 75% on back of higher prices. Now, as far as EBITDA is concerned, for FY22, the current year, they're expecting a 50% jump in EBITDA, and that trend to continue in FY23 and FY24 as well, largely on back of two factors. One, they expect higher profitability from Novelis, and B, they expect the India aluminum business to be much stronger, and on back of that, they've sharply raised the EPS estimates as well as the target price now to 555 versus earlier target price of 330.
Nimesh, thank you very much for that. So that is Hindalco in focus. Sanjiv, Bhasin of IIFL Securities is with us. Sanjiv, great to have you with us here on Closing Bell. Broadly, what should one do? Should one keep the faith, stay long across the board? Because we've had a bit of shakeout over the last 4 or 5 days. Mid and small caps started correcting the week before, and even large caps have seen some correction. I mean, specific names here and there over the last 4 or 5 days. What should one do?
Yeah. Good afternoon, Prashant, to you and Nigel. Well, market is all about churning of stocks, and there is an overweight on IT and FMCG, which indices are hitting new highs. There is a carnage on the mid-cap side, which is, I think, uncalled for. I think mid-caps will come out with very stellar numbers. There were reports of the stress on mid-cap banks being much less than was anticipated, and so on. And we think that the reopening or the vengeance spending, which will encompass in the next few months, will be very, very humongous. And you'll see a lot of the mid-caps outperform, particularly the banks. We also think autos now are giving you an opportunity. If you just take in place the, little caution on semiconductors, I think the demand is very strong for the like of Tata Motor, Hero, Bosch. So we think this is a time to put your money where your mouth is. The index may be in a range, but it is outperforming because global money is coming there because of China and other factors. And we think the best is yet to come for mid caps. So this is the time to rebuild your portfolio on the mid caps. Look for this weakness to be an opportunity, and look forward to the first week of September onwards once we are through with this series and beyond. Because I think the month of October will play out maybe the best for mid caps.
Right. Hi, Sanjiv. Afternoon. If you're looking at building up your mid-cap portfolio and doing a bit of a churn out there, what would you look to buy from the mid-cap index? And also, just a few minutes ago, Nimesh joined in to tell us about Hindalco. And we have a brokerage note coming from Credit Suisse who's very, very bullish on the stock. View on Hindalco and what's, coming up for you in terms of something you like from the mid-cap space?
So like I said, mid-cap banks, autos, construction, real estate, these are the stocks which we are very, very bullish on sectors. And there is a plethora of stocks to pick up. On Hindalco specifically, Nigel, Hindalco plays on the TCRC margins. And with high copper prices, the margins are very, very firm. Plus, you've seen that inventory of copper has played out brilliantly. So yes, on all declines, Hindalco must be a buy along with Tata Steel. They will be volatile because of a dollar or the run-up which you've seen. But they are two specific companies which are very, very keenly going to play the reopening trade and the huge impetus which we've seen for metals.
I mean, I think the only pure copper play is, in terms of a miner, is Hindustan Copper here. I mean, listed here. And that is down about 6%, maybe rightly so because of what's happened as far as copper prices themselves are concerned. But take that view on Hindalco. Let's just move on to the other sector, Sanjiv, which you alluded to briefly. I'll come to that for a detailed view. HCL Tech from the IT space is actually the top gainer. Other IT stocks are doing well as well. But for HCL Tech, there is a new order and there is a target price upgrade from CLSA, which has come in as well. Rima is here with the highlights. Rima.
So for HCL Tech, there are two sets of news. One is an order win. So the company signed a digital transformation contract with Munich Re, which is one of the largest insurers in the world. The contract is to modernize the workspace for Munich Re's 16,000 employees over 40 countries. Munich Re is an existing client for HCL Tech, and now the scope of the engagement has been expanded to include workspace transformation. Separately, CLSA today has raised the target price on the company to 13.20. They've increased the target multiple to 21 times. Their conversations with the management indicate that the company expects a strong bounce back in Q2 in terms of growth rates, which will be driven by the ramp up of the $4.8 billion of new deal wins that the company won in the last 2 quarters. They expect that momentum will sustain over the second half of the year. New order booking is likely to improve on a quarter-on-quarter basis, and the company also expects to catch up with peers in terms of organic growth rates by FY23, FY24. On margins, they see scope for some expansion over the longer term. Though for the near term, for FY22, they hold on to their guidance of 19 to 21%. Remember, the stock has been an underperformer vis-a-vis the Nifty IT index. On a year-to-date basis, HCL Tech has underperformed Nifty IT by 17.5%. So undemanding valuations is also another reason why CLSA has raised the target price.
Got it, Rima. All right, note that point. HCL Tech, that's the big gain, and it's moving from strength to strength. At every decline today, it's given you some money. Just take a look at that. Moving now to the high point of the day. Sanjiv, this month the Nifty is up close to around 5% odd, but the IT index, that is up close to around 11%. That's telling you the kind of outperformance you've seen from IT companies. Your view on HCL Tech, and what would you want? Would you want to buy large cap IT or mid cap IT at these valuations?
So, Nigel, as a disclosure, HCL Tech and Tech Mahindra have been 2 of our large cap picks. As a disclosure, we've been advocating buying from 920 and 950 on Tech Mahindra. Like you said, it was underperforming, but now it's starting to catch up. We still think HCL Tech is a brilliant BFSI play, and the valuations are still rather undemanding if you compare them vis-a-vis an Infosys or a Wipro or TCS. So yes, HCL Tech and Tech Mahindra, Mindtree, of course, it's run up a lot, but on all declines, these 3 would be our plays on the tech side.
Okay, all right, Sanjiv, just hold on to that thought. We're just going to take a break and come back. But when we come back, we'll focus on a couple of companies. Nuvoco Vistas, well, it made its subdued debut on its bourses. We'll get you more details on the other side. Zomato dips as the lock-in period for anchor investors ends. More on that later on. And we'll also get chatting with our alpha manager of the day, Mr. Gautam Sinha Roy of ICICI Prudential Life Insurance.